This is Christopher Farmer, Tribeca Trade Group, and this is your end of day market recap for Monday, February 5th. A very macro type of tape for today. Definitely some things to to keep an eye on. We know that we've been in an environment of poor market breadth since the end of December, and that's kind of continuing right now. So you could see from how I've got my spreadsheet sorted over here. Let me just move this, get that out of the way. But you can see from how I have my spreadsheet sorted, which is percentage change from the open. I don't have it sorted by overall performance for the day, but you can kind of just get a sense that there's a lot more red on the screen for today. And, there are definitely some bright spots. So, so there's the good and the bad. But right now, given market breadth, there's a lot more bad in the market right now. So now, again, this could be a temporary type thing, right? We know that we're in February, which we talk about always with markets. We're dealing with an uncertain, it's a very uncertain environment, trading and markets and so forth. But sometimes what I'd like to talk about is, well, what do we know? Well, we do know that over the last 30 years, February is the third worst month in terms of performance in the market. And, that was something that I went over for Tribeca Trade Group members over the weekend. And I just talked about, which I think I have this someplace in here. So here, okay, so here you go. So this was last year. Again, just gives you some perspective. It doesn't mean that this is going to happen the same way, but notice what happened the first week of the year. This is performance of the S&P last year, week by week. So the first week of the month of February last month was up 1.6%. And then you had 3 weeks of negative performance, with the worst one coming at right around the last week of the month of February 2023, was down 2.7%. But we kind of bounced back thereafter. So it's just something to kind of keep in mind. I do look at seasonality as one of the factors that, it's just something to kind of have on the back of your mind, because again, you have those raw numbers. By the way, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. And I think I've gone through the first couple minutes of the video, and I haven't talked about NVIDIA or SMCI, but I will get to those, right? That's what everybody's talking about, is, how well those companies are doing right now in a very tough environment. Some people are agitated by those moves. I think, what I try to do is not argue with the price action and try to just ride along with those names. And SMCI was something that I did trade, and it worked out quite nice. So I will get to that in the video, but I will talk about the boring stuff here just for a second, because we've got headwinds in this marketplace right now. And the first one, I think to talk about is what bonds are doing. So again, why are bonds so important? Well, because it represents either whether or not you have a good environment or you have a bad environment. And, and again, they're just one factor. It's not the all in all, but it's kind of a decent piece of the puzzle. So first of all, what happened today in economics? Well, this is not like such a horrible thing when you really think about it. The economy is doing fairly well. Right. I think we started to see a couple data points to indicate some softness a couple weeks ago. But you look at the services number that comes in, 53.4. Remind you that ISM and PMI data are more leading indicators, right? We know that like GDP and so forth, that's old data, but the services is fresher data. And again, it's more of what economists refer to as a leading indicator. So that comes in at 53.4. 52 was the expectations. Anything above 50 is expansionary. So the economy is doing pretty well. Now, you could debate or argue different points, but overall, that's the market that we have right now. And it just means that there's not a real reason to kind of cut interest rates, right? Why would you want to cut interest rates when you've got a strong market and that inflation hasn't been it hasn't gone to the Fed's goal of 2%. So one thing I would say, so there's a couple positives, but one positive is the market is no longer pricing in a March rate cut. Good. I don't think that there really should be anyone, right? And I've talked about how I don't know why Powell spoke up and said that that could have been on the table back in December, but that's what he did, right? And we can't control that either. There's a 58% chance of a cut in May. Again, these numbers will change based on some things, but so that's the situation there. And of course, when I look at interest rates, so again, when we talk about those types of rates that the Fed is controlling, that's the overnight rate. And when we're talking about whether that happens in March, the possibility in March or May, we're talking about the overnight rate. This, of course, is other maturities, further out maturities. And again, just giving you a little bit of an explanation here, but look at all the, look at the jump in the yields. 14 basis points on the 7-year is a very big move when you look at these, what's going on with the yields. And you could look at just, if you want to look at one individually in the chart, but it has been moving up here, right? From where we were, back last year, right? So of course, when we look at bond prices, it's inverted, right? So when we look at this TLT, right? TLT had a really nice gain last week, even with that down move. Remember, I was saying one day is not a trend. Well, we had follow through to that, and we're kind of testing last month's lows. So I personally would like to see us, and I think market bulls probably want to see this hold. If it breaks, then for me, I would assume that we're going to see more breakdowns and more things like breakouts fail, right? So you've got to be more, like my opinion, again, I'm not giving anybody advice, but have to be more conservative with risk taking if we begin to kind of break the lows here, right? And then the other one is what the dollar is doing, right? And I'm going to use DXY here. Forex. That's not showing that. Again, I'm still learning trading view, so if I can't get it right, let's do it over here. All right, so here's DXY. Again, big bullish engulfing candle, right? So we started to move, we're starting to move higher. Right. This is where we were back in, the October highs. I mean, is this something really to get that nervous about right now? I think it's really something to keep an eye on, because the last 2 days were pretty powerful moves in the dollar. You could see these two candles from the prior activity, but we're still kind of sideways. We are leaning on moving higher here. We're back above the 200-day moving average and back above these short-term moving averages. So I think that you really, have to be cognizant, in my opinion, that when this dollar is stronger, right, that is a risk-off environment for equities, for U.S. equities. So that's where we are right now, and sideways, but it's been getting stronger, right? Other things. So of course, when the move in bonds is not going to affect all stocks the same, right? And I've done this comparison on Twitter. I'm not going to do it right now because I want to keep this video short tonight. But there is a relationship right now with small caps and with bond yields. And so when we look at what's happening with those situations, right? And let's bring up IWM now, right? And this did break, right? So looking very different than the S&P and the Qs, right? Notice what happened here. We broke the February value area to the downside, and we took out this virgin point of control, but we have a hammer bar. So this market for now just kind of there's some fight to it, right? It's not breaking down, right? Moves to the downside are getting bought to some extent, depending on the stock, right? And so that's IWM, VPOC being taken out. Also, when we look at this on the 1-hour chart, right, this also coincided with the VPOC over here, right? And so we took this out. Notice we had a pretty nice bounce off of that, but the bounce went right into the bottom of the value area for the week and got rejected. So, if you're looking to short something, right, and if you're worried about higher rates, and if you're worried about the stronger dollar, I think this is your candidate for a short. Because if you look at the other two charts, right, so here's Qs, right, again, just talking broadly about the indices, this is the Qs above value, above value for the week, right? So you could try to give some other context here, but this is still pretty darn strong. There's nothing wrong with price at 52, at the highs, right? And same thing for SPY, or you can look at S&P futures, an inside day today after making new highs. So you can't complain too much about that. You can complain about the weak breadth, right? Because there is some cracks in, under the surface, because you're just not seeing, that powerful of a rally, right? And here's what I mean by that. This is something that I talk about a few times a week, especially when there's something material to talk about. This hasn't been updated, but here's what I was referring to, where breadth has been poor for all of January. It got a little bit better a couple weeks ago, but is basically starting to go back down again. Now that's NASI has been worse, right? And again, there's more of those stocks when you look at the IWM chart, right? So that's the environment that we're in right now, and I think it's important to kind of recognize that things are not, and the example that I always give is it's much harder for a stock picker when you've got more stocks going down. That's the environment that we have right now, right? And that's been the situation since the end of December. But of course, there are opportunities out there, right? When you see what NVIDIA is doing, of course, right? New highs today, getting up to that extension at this point of the February value area already, right? And SMCI. Right. And I went after SMCI today because, so first of all, I had it on the watch list for the weekend. And I said, I'm not putting NVIDIA on the watch list because I want to see it pull back a little bit, and then I'll add it to this week's watch list. But once we had that price target raised by Goldman this morning for NVIDIA, and it was up that much, I just looked at the 1-hour chart, and I decided to take a position. Now, again, I don't take big positions in the first 5 minutes of the day. Whoops, sorry about that. But you could kind of see, like, this was the making of, this was right in the beginning of the day, and that worked really well. So for me, getting one or two of these trades, is helping a month where, we're dealing with tough breath, right? And so here's what I did. I got back involved at 594, and boom, 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 boom. I took my last target, and I want to hold the rest for now. But 628, and the stock went all the way up to 663. So just amazing. And so other than that, I could go through a few other stocks, but clearly the semiconductors are where it's at. Taiwan Semi, here, I'll go through and I'll use this again. Use TradingView for some of these charts. But Taiwan Semi looks pretty good. This is a name that we saw call buying, moving above the February value area. 122.59 is a VPOC that you can shoot for, right? VPOCs are where there's a lot of volume previously that we haven't revisited, right? So it's kind of like an overhead supply area. Broadcom acted pretty well too today, continuing to move higher. Nice little bounce here, and yeah, not bad. ARM did okay. That's a name that I'm still holding. I want to see it get out of this value area, which is 74. So I'll give it a chance to possibly do that. Overall, I think the trend is okay there. It's just not acting as strong as some of the other names in there. And then we could talk a little bit about sectors here too. Well, one name, again, I continue to put together an earnings list. I think we've got well over 40 names on our strong earnings list. This is one of them. So I like this little pullback, right? Big green candle on earnings day. It just has to trigger and it has to turn, right? So it's not that, in my opinion, it's not there yet, right? I have an alert. So I use the 1-hour charts quite a bit, right? And I'm looking for that turn into the value area. So not yet, but that level's right around 182.60, right, for Nucor. Picar is another one too, right? We talked about how well the transports have been acting, right? Just to go over a couple more names. Whoops, sorry, I got the wrong thing here. Right, another strong transport name. So again, there's a lot of good things going on, right? And like I said, the economy is strong, so you would think transports would be doing well. I'm also watching some of the travel names too, right? I think that there are certain individuals that are doing really well. I was talking about American Express. Look at American Express, right? A lot of a lot of individuals book their travel plans and so forth, but I think depending on certain consumers, I think more high-end consumers are doing well in this environment, right? Because they're earning yield on their money, right? And they may have locked in their interest rate on their home at a cheaper rate. So they probably have a decent amount of discretionary income that they could be doing things like traveling, right? So that's an area that I think is interesting. XLI, let's go to the industrials. Let's talk about a couple of just sector ETFs. Inside day today, right? Continuing to see really good results from industrial companies. Healthcare, we're going to get a big one tomorrow. Eli Lilly reports. But this, I mean, look at how great, in my opinion, this is on the weekly chart. Right. So let's move this. Let's zoom out. And again, you have to be patient with something like this, right? But overall, this pattern looks very good if it continued to break out here, right? Could be really onto something here for healthcare stocks. They just need to continue to kind of push a little bit higher, but you got like a multi-year possible breakout, right? And I think we're seeing more strength within the group. AbbVie, right, is another name that looks pretty darn good, right? These are not as exciting of names as cyber names and so forth, and small cap software names, but I think Crowd looks okay right now. Right, that's another name that I keep coming back to. It needs to, I think, a little bit more decisively break this value area, but I remain long in the TTG trend portfolio. I also continue to be long NVIDIA in the TTG trend portfolio, which is working, and just letting those things work pretty well. So that's it for today's recap. I think take it day by day with this weaker seasonality that we're in right now, and macro headwinds, but all in all, I think if you're patient, personally, I think if you're patient with this month, that I think things will return. I think that this not volatility, because the VIX was down today, but I think this poor breadth and the poor price action is temporary, and I think if you're patient, things will work out and breadth will improve. But we need some things to kind of click as well. Hence those bonds and the dollar. Guys, have a great night. See you tomorrow.